we're ready to start the discussion on the financial sector. So I would like to welcome our three panelists who are talking today. John Cachorra from ABSA Africa, Tiago Laranjeiro from Angola Capital Partners, and Pedro Pinto Coelho from Standard Bank Angola. We are going to be discussing primarily the financial sector in Angola. It has been said that Luanda is the third largest financial sector in Africa after Johannesburg and Lagos. Whether that is entirely true, I'm sure our experts will be able to fill us in. But it's a sector that has expanded enormously in recent years. It's almost unrecognizable, in fact, from how it was 10 years ago, and is certainly one of the potential growth sectors that South African businesses would be focusing on. So just to introduce my panelists, first of all, we have John Cachorra, who is the CEO of ABSA Africa since July 2010. He is also head of ABSA Capital, the investment banking division of ABSA Bank, and he will be talking about particularly investment banking in Angola. I understand he's also been involved in financing deals with Sonangol and also in the acquisition of Angolan Bank. I'd be quite interested to hear about that as well. We also have Tiago Laranjeiro, who is the managing director of Angolan Capital Partners. This is a private equity management company which led the preparation and launch of the first private equity fund focused exclusively on the Angolan market. He has extensive experience in the financial sector and has worked before for AMSCO and Norfund. He would like to talk about the SME finance and, to a certain extent, microfinance. Unfortunately, Ronaldo Villanueva from Kishi Credito was not able to join us today, so others of us will be taking over the financial discussion. And finally, we have Pedro Pinto Coelho, the CEO of Standard Bank Angola, which, of course, recently just opened its first fully serviced branch in Angola. He will be talking about the banking sector in general. So if we could start by giving each of the panelists around 5 minutes to give their views on these different subjects, and then I would like to open it up to questions and start the debate going. So, John, if you'd like to start for us. Thank you.
Sure. Thanks, George. I was actually involved in the selling of a bank stake as opposed to acquisition. So, as you may know, ABSA had been in Angola for quite a few years. We were 50% owners of a bank called BCA, Banco do Comércio de Angola, which we exited last year. I think a lot of the challenges that George spoke about in his presentation were some of the challenges we faced ourselves in Angola. However, in recent discussions and recent media conversations that we have had as a bank, we have stated our intention to go back to Angola. And in fact, we do plan to be in Angola beginning of next year. What form that will take, we're still deciding, it's still in discussion. But we do plan to go back to Angola. Now, why would we want to go back to Angola, and why did we exit Angola? As you may know, there are three, probably actually I think four, but I'll mention three industries in Angola that are highly regulated. It's oil, it's telecom, and the financial services. Having gone to Angola, we were 50% owners of a bank. And what happened, George talked about the elites. The rest of the shareholders obviously were the elites. And what happened, there were a number of shareholder disagreements, and those disagreements could not be resolved. And the best solution, we all came to the conclusion that the best solution was to exit that particular stake at that point. It wasn't our intention to exit Angola. In fact, we tried to expand our ownership of that bank. So I just want you to know that our intention to be in Angola, our interest in Angola has been for a while, and exiting out of Angola had nothing to do with us not wanting to be there. Angola presents a lot of opportunities. A recent article by The Economist, I just can't remember which month it was, talked about banking revenues in Africa. And just as George said, Angola had the third largest banking revenues after South Africa and Nigeria. What that tells us is that the opportunity is enormous. And as much as the GDP growth may have stabilized, and this year I think is reputed to be in the low single digits, I think everybody still believes, given all the infrastructural investment the government is doing, the GDP growth is going to continue to be relatively large. According to IMF, Africa's GDP is reputed to grow at 7 to 8% for the next 10 years. A lot of that is going to come from countries like Angola, Mozambique, and Nigeria, of course. So it would be a folly for any company that wants to be serious in sub-Saharan Africa not to want to be in Angola. The other thing of interest for us is obviously the diversification of the economy in Angola. We are probably the largest bank when it comes to agriculture in South Africa, and that's an area we want to play in the rest of the continent. Angola is making a lot of efforts to diversify their industries into the agricultural sector, and that's an area we think that we can add a lot of value. George mentioned about our investment with Sonangol. We've done quite a few deals with Sonangol. You know, if you do business in Angola, you have to do some business with Sonangol, fortunately or unfortunately. So all that tells us that there's a great opportunity, and I believe that's why most of us are here today, to hear about these opportunities. Thank you, George.
That's great. Thanks very much, John. So if we could move on for some comments from Tiago Laranjeiro about the financial sector.
Yeah.
Thank you.
Well, so the brief introduction, I think adding to your speech in the beginning, Angola is poised for some years of high economic growth, and basically Angola Capital Partners, we've just raised this year the first private equity fund for investment exclusively in Angola, and we're focused on the small and medium size enterprise sector. And the reason I say it relates to some of the forecasts of growth for the future is that it's been mostly unanimously viewed that a lot of the future growth will come from the non-oil sectors, because in the recent years the oil sector has expanded very fast, and all the other sectors are catching up. The economy is diversifying, as we've heard. The government, one of the main policies is to try to diversify the economy, and the role of a private equity fund that focus on SMEs, it's especially important at this moment, because in the non-oil sectors, contrary to the oil sector where the big companies prevail, it's a SME world. It's an SME world. The SMEs have more restrictions in terms of obtaining financing. They have less collateral. The banking sector does not traditionally serve the small and medium enterprises as well as the large companies, and that's where this kind of vehicle and this kind of instrument is important. We've just to give a background, we've launched a fund in the beginning of 2010. We've had founding partners as Norfund, the Norwegian Development Finance Institution, and Banco BAE, which is the largest bank in Angola. To those promoters, we've also added financial investors such as the European Investment Bank, the IFU, the Danish Development Finance Institution, and BPA, which is another Angolan bank. So with this initial capital, we've already had opportunity to basically sign 2 deals in the first year, and we expect to do the same over the next years. What we felt in the 2010 in terms of the financial sector is that although we have identified this need when we set up the fund initially, idea in 2008, 2009, is that in 2010 this need was absolutely increased for financing for SMEs. I think one of the reasons was due to the financial crisis. The government responded with a more restrictive monetary and exchange policy, and this caused, let's say, a sort of a government crowding out for the rest of the economy. This was seen mostly in the central bank titles, which were rose up almost to 25%, and the banks restricted the credit to the economy, specifically to SMEs. And we saw in 2010, in terms of private equity, the demand and the approach that we had from companies a large increase of companies coming to us because they could not get bank financing because the banks were basically tightening their credit policies. And that's something we felt specifically this year.